I was watching YouTube the other day, as many of you do, and I learned about something pretty shocking, guys, about how auto loans and the entire used car market works. And it's kind of unbelievable, but it also explains why so many people are losing their cars right now, why so many people have repossessions, and why so many people cannot afford the vehicles that they are buying. There's an entire system behind auto lending that is actually designed to take your car away, guys. They're basically expecting to repo your car that you bought within the first couple of months after you buying it. That's how predatory the lending has become with the auto industry. And today I'm walking through Maurice Gibb Park here in South Beach. I'm going to be walking along the marina here too. So here's kind of how this scam works, okay? There was a woman who bought an SUV that was only worth about $6,000, maybe $12,000 tops, okay? But the loan that she ended up with when she bought the SUV was $46,000. That's how much money she would pay over the life of the loan for this vehicle. And the thing is, this is not even a rare occurrence. This is actually the way it's designed, and people fall for it every single day. And later on, I'll get to some ways that you can make sure that you don't fall into this trap yourself. But auto loans are one of the fastest growing types of consumer debt right now. And millions of people are basically just one missed payment away from a repossession. So here's how this woman's loan was structured, okay? The dealership made her put $2,000 as a down payment. Her payment was going to be about $670 a month for 5 years. And if you think about it for a second, that $670 monthly payment on a 10-year-old car is a lot of money, guys. You can almost get a brand new car for that type of payment. And this woman made a lot of mistakes. I mean, she was clearly an uneducated buyer when it came to buying a car. She paid way too much for the car. First of all, that was mistake number one. Mistake number two was knowingly signing up for a payment that she knew she couldn't afford. But basically, she was like, listen, I'm desperate. You know, I need a car. My family has to get around. What am I supposed to do? Well, that's perfectly reasonable. That's a reasonable thing to say. But what you are supposed to do, in reality, if you want to know, is you're supposed to take that cash, that $2,000, keep saving it, or come up with a little more cash and buy a used vehicle that costs no more than $4,000 or $5,000, $6,000, pay cash for it and not have the loan. And then none of this would have happened to her to begin with. But hindsight's always 20/20. But here's what happened. She bought the car. She ended up driving for DoorDash on the side just to be able to try to make ends meet and make the monthly payments on the car. But then trouble showed up pretty quickly. The steering column on the car broke, the transmission went out, and then something very dangerous happened when she was driving. The brakes failed, and she plowed into another car through an intersection. And she's lucky to be alive, because when things like this happen, you know, it's just fate at that point, whether or not you're going to make it out alive. So after getting into this crash, the SUV was totaled, and that's when she discovered that the car was only worth about $8,000. But her loan, she had $24,000 left on the principal, and with the interest, that's how she got to that $46,000 total in debt for a car that was worth $8,000 tops. And this is what's exposing the seedy underworld of subprime auto lending, okay? This loan was from a subprime auto lender, and they work with thousands of dealerships across the country. And companies like this specialize in lending to people with bad credit, low income, past bankruptcies, and limited options who are desperate to get a vehicle just like this person. What their claim is they're helping people get access to buying a car who otherwise would be shut out of that market, kind of like the excuses they use to allow FHA loans for people to buy houses and things like that. But the reality is it's predatory lending, okay? They actually don't care if the loan succeeds or fails. In fact, they're betting on the fact that you are going to fail. They're basically assuming that after you buy the car, if you're somebody who fits this criteria, within a few months, you're going to stop making payments, and then the car will be repossessed, and then they will go ahead and start the cycle all over again with someone else. These predatory lending companies actually have algorithms that predict how much profit they will make from the payments, the late fees, the repossession fees, collection charges, and selling the car again. So in other words, the loan is profitable even if the borrower defaults. In fact, it can be more profitable if the borrower defaults. And they do this multiple times with the same vehicle. How this usually looks is the dealership will sell the car for more than it's worth to an unsuspecting consumer, somebody desperate to get the car and kind of surprised they got approved for this loan, right? And then the payment is so high that the borrower eventually falls behind. The lender repossesses the car, then the car gets auctioned or sold again, and then the whole process repeats. And in one case, a loan officer actually described a situation where they opened up a glove box of one of these cars and they found 7 different loan contracts for the same vehicle in just the past year for one car. Guys, that's how many times these vehicles can get passed around by people that are losing them left and right. So you have the same vehicle sold again and again, each time with a brand new high interest rate loan, basically expecting the next person to fail. And clearly this system works very well if you can have a vehicle that was sold 7 times in the past year and every single one of them lost it to repossession. And this actually contributes to the problem of why cars today are so overpriced, because when a buyer needs financing, the dealership often receives less upfront from the lender. So in order to compensate, the dealership raises the price of the vehicle. This extra cost is hidden in the vehicle price itself. So the buyer doesn't even realize they're paying for the financing inside the price of the car. And then by the time you add on the interest, a $10,000 car loan can become a $40,000 loan, which is absolutely insane. And you got to look at it like this, man, like a brand new car, the average typical brand new car payment is like $750 a month. If you're going to a dealership and you're buying a 12, 15-year-old car and you're paying $500, $600, $700 a month, you are completely being scammed or ripped off, guys. That is a huge, huge warning. But a lot of people get sucked into this because they don't know better. They don't have a high amount of financial education. People also need their car for work, going to get groceries, picking up their kids every day, the daily routine that we all know so well. So people just end up accepting these loans and that's it. They worry about it later. In fact, when I was driving back from Palm Coast the other day, guys, I just have to give you a quick side story here. I was at the gas station. I saw this guy pull up on my brand new Harley, okay? And then he started having a telephone conversation right next to me that I overheard for a minute. He was talking to his buddy on the phone saying, oh, you know, I almost got hit, crazy accident. They almost killed me on the way over here. And I need to buy this helmet, but I can't afford it. I'll have to open up a brand new credit card or I'll have to go into debt to get this helmet. I don't care. And think about that. This is somebody who has like a brand new Harley. I don't know how much that thing costs, probably like at least 30 grand, right? And then they're saying they can't afford the helmet, you know, to save your own life, and they almost got killed. This is like the mentality of some people. Like, I bought this brand new bike, but I'm so broke, I can't even afford the helmet to keep me alive. That's a real world conversation I heard happen just a couple of days ago. So now that you've heard how this problem happens, let's talk about how to make sure it doesn't happen to you, okay? First of all, you always have to check the car's real value before you buy anything, guys. This should be on your checklist, and you should never buy any type of vehicle without knowing first what the fair market value is. You need to go to a site like Edmunds or Kelley Blue Book, things like that. If the price is even a couple $1,000s higher than what you're looking at paying, you say no. You make the offer for the fair price, you negotiate it, okay? And if you can't get it, then you focus on moving on to the next deal. Also, you need to look at the total loan cost. When the dealer gives you the paperwork of the sale contract, they love talking about the monthly payment, but they often try to help you ignore the total amount you will pay over the life of the loan. And sometimes that number can be very shocking, like the woman in this story. Another big mistake that a lot of people are making these days is they are signing on for loan terms that are way too long. Like really, the maximum loan term that you should be signing up for is 60 months, which is 5 years. Anybody who signs up for a loan more than that, it is too much, guys. But it is becoming extremely common for people to do 7 or 8 year auto loans these days. Also, you need to be aware of your interest rate. A lot of these subprime auto loans can reach a 20 to 30% interest rate. And at those rates, just the interest alone can surpass the price you're actually paying for the car. That's how you buy a $10,000 car and end up paying 40 grand over that 5-year loan term. Another huge thing that you can do, you can already get your financing before you even arrive on a dealer lot. Go to your credit union, go to your bank, go to an online lender, just anybody, before working with a dealership, especially the dealers that provide on-site financing. A lot of that can be predatory lending. Also, another huge pointer, never buy a car that you cannot afford without taking on a side hustle. Like this woman, she bought the car and had to do DoorDash on the side just to be able to make the payments. That's a huge no-no. That's a clear sign you can't afford it. The other thing you can do, get the car inspected, guys. Take it to your mechanic. Any reasonable car dealership won't have a problem with you actually getting the car checked out by a mechanic of your choice. I mean, this could be as little as $100 to have them look it over, basically give you all the issues that could be wrong with it or could come up soon, and kind of give you a thumbs up or thumbs down, like, hey, would you buy this car? If they say no, walk away. These are not rocket science points that I'm making here. But clearly a lot of people don't know this stuff, with the fact that we're starting to see record amounts of cars being repossessed, and auto delinquencies are basically at the highest level ever right now. A new poll just came out from the Washington Post, and they asked people about affordability, and the results are pretty shocking. Most Americans are saying that they feel financially stuck. And the first thing that the survey found is pretty interesting, which is that most Americans say they can still afford the bare essentials like housing, groceries, utilities, and gas, but the key word here is barely. According to the poll, 53% of Americans say they only have enough money to maintain their current standard of living. No extra savings, no financial cushion, and no upgrades to your lifestyle whatsoever. In other words, you are just treading water. And the moment people try to spend money on anything beyond the basics, that's where the problem begins. And that's how you end up kind of giving into this situation where, oh, I just want to buy that car. I think I'll find some way to swing that $600 or $700 a month payment, and you get upside down quickly. I mean, just by looking at this chart here, it gives you a clear outline of what people are saying is affordable these days and what people are saying is unaffordable. And it quickly gets unaffordable quickly once you start going down the list of groceries, energy bills, going out to dinner. Half of people think going out to dinner is unaffordable now. Healthcare is unaffordable. Taking a week-long vacation, pretty much out of the question, just as much as buying a brand new car. So what we can gather from this is that the good life is becoming completely unaffordable right now. Many Americans say they used to have a middle-class lifestyle, but now that is completely out of reach. And the only thing that has changed is the price of everything. So people who used to be able to go out to eat on a regular basis or take a vacation once a year or buy a new car are completely priced out of that lifestyle now. And for the longest time, this was just considered middle-class spending habits. You know, nowadays, this is moving up into the luxury tier of lifestyle. And you can see one of the key data points here is the most unaffordable thing, according to Americans, is a new car. We're talking a brand new car. And that's another way that people fall into this trap of buying these used cars for a much higher and inflated price that can have a lot of problems and fall apart on them very quickly. You know, people look at the cost of a new car, $50,000 is the average price of a new car, and $750 a month average payments. People look at that and say, yeah, I can't swing that, but maybe I can spend half of that and I can afford a $500 a month payment, but that's how you get in trouble quick. I mean, even people who are doing quite well financially are still having a hard time keeping up with all these increased costs all at once. You know, this story gave an example of a man making $150,000 a year who still ended up paying hundreds of dollars out of pocket just for a simple CT scan because his health insurance refused to pay for it. So something that was supposed to be covered ends up costing you $600 or $700. So it's not just like people who are on the lower income side of things who are struggling. The ones who are making 6 figures plus a year now are also feeling the same struggle. They talk about a woman here in California who makes over $100,000 a year, which many of you probably know that in California, that's basically nothing anymore. It's barely a living wage. She's been trying to buy a home for the past 5 years, but the homes she's looking at start at around $700,000. So she's stuck renting, and her monthly costs are $3,000 in rent, $300 on health insurance. She'd be lucky to be paying that low of amount, plus high gas prices. And even though she got a raise recently, she says it doesn't feel like she's getting ahead financially at all, because every time her income goes up, so does the cost of living. But I think people who are in this situation should really take a look at it and kind of view it from a different angle. You know, like I covered this already about a week ago, guys, that renting and investing is the clear winner if you just want to get ahead financially in life. So feeling frustrated and stuck and left behind, you're not able to buy a house. I mean, if you're already struggling now and you're renting, imagine what it's going to be like if you're actually able to buy that house. Even if the down payment was free, they give you 0% down. You get into that house, you're going to have a much higher payment than that $3,000 a month in rent. That's for sure, probably about double, if not more. You're going to be on the hook for all the unexpected repairs that come up, which means how long you're going to be able to hold on to that house for. You know, all of your money at that point is going to be going towards just maintaining and paying for that house. And that's why less than 30% of Americans these days say they are actually getting ahead financially. If you look at this chart below, it shows you people's outlook about where they're at, okay? 28% say they feel like they're getting ahead. 53% say it's just enough to maintain their current standard of living. 17% say that they're falling behind. So this kind of backs up what we just talked about, that the vast majority are just barely treading water. You get a raise? Great. Well, the price of everything just went up. Doesn't matter. The wage is negated by inflation and the increase in cost of living. And they break it down by income groups, political parties, and all kinds of things like that. But I think the most interesting part here is even at the 100,000 plus income, only 40% say they're getting ahead, which is almost half, but you would think it would be more. But that just goes to show you that making $100,000 a year these days is not what it used to be. Now, they focus a lot on housing and renters versus homeowners in this story, and I'm not going to go over that too much because we've already kind of done that to death on this channel. But one thing I want to highlight is how half of renters say that their rent is unaffordable, and they somehow think that if they were homeowners that their lives would be better. But I think a lot of these people are just so naive about the current state of being a homeowner. Like, yeah, your rent might be unaffordable, it might be hard to get ahead right now. You might feel like you're never going to be able to buy a house in your current financial situation, but that could be a blessing in disguise. If you can barely afford the rent, guys, I can assure you, you are not going to be able to afford being a homeowner. It is always more expensive when you look at your monthly payments combined with the actual cost of maintaining the house. It didn't used to be that way, but today it is that way. Even if you're in a market where buying a house is still cheaper monthly payment wise than renting, you are still going to end up paying more due to all the additional expenses of owning that home. I mean, here's an example from the story right here. This guy who owns a house, he's actually a homeowner, says he can no longer afford his annual vacation because travel prices have skyrocketed and being a homeowner is also expensive. So you kind of have to pick and choose in life now, unless you have a very high income. What would you rather have? Would you rather own the home, or would you rather be able to have more freedom and flexibility and be able to take that annual vacation because you're not spending it on paying for the house? So you pretty much have to choose now. And the whole point of this video is people are getting squeezed from every direction, but so much of the problems that people have could essentially be avoided if they just knew more about how to buy a car financially responsibly, for example, okay? Or how to make extra money on top of your income, so that way you're not just barely treading water and you can get ahead. And I have gone over that on the channel a lot in the past as well. But if you are somebody who wants to get ahead and you are somebody interested in doing more than just the bare minimum and just treading water, I highly recommend that you check out this video right over here, because in that video I go more in depth about how you can do that and really start moving forward in the world if it's something you want to do. So if you enjoyed this video, make sure you are subscribed to the channel, and I'll see you over in that next video.